Good morning, traders and investors. My name is Roger Scott, and I'm the senior strategist for Wealth Press. Today is Friday. It's May 20th. It's about 7:37 in the morning. The market's going to open up in about an hour and 52 minutes to be exact with you, to be very specific with you. We've had a big earnings season that pretty much ends this week, and there's no major catalyst till next Wednesday when we have, I believe, the durable good orders. This week, we've had a lot of data. Basically, we figured out that retail sales is strong, existing home sales are slowing down, and manufacturing activity is so-so. Now, the interesting part, and the part that I'm really liking right now, and I'm really liking this, is this bond market. Notice how choppy it's been. And I've been really focused on this because this is very meaningful. Because, look, the stock market, especially the NASDAQ, started falling around December of last year, right? November, December, that's when we had the major sell-off start. And as you can see here, interest rates started going up. Bonds started going down. Interest rates started going up. They're inverse. And we've been going down pretty good. I mean, look at this. We went from 155 all the way to 112, 111 something. But notice this is the first time, I believe, that we've been this choppy since that period. Maybe I'm wrong. Maybe there's a period here as well. But during these periods, this is when the long bond says, I've had enough. And if we start going higher right now, just a little bit higher, it'll show that the long bond does not believe that the Fed is going to increase interest rates in the short term, which is a positive sign for the stock market. So I'm hoping that will happen, and I'm hoping the bond market is finally saying, look, I've had enough for a while. Long-term rates are going to stabilize at this point or actually go a little bit lower. If that's the case, that'll be a good reprieve for the stock market. In terms of global economy, boy, oh boy, we've had a lot of stuff this week, and that's not even talking about war. Global stock market rose Friday after Wall Street fell very close to bear territory. The benchmark, which is the Dow Jones, is down 18.7%. If it hits 20%, we're in a bear market. Again, I followed the rules. I'm a stickler for the rules. We're just not there yet. Chinese central banks reduced its rate on a 5-year loan, which would shore up weak housing sales by cutting mortgage costs. I don't know how much that's going to help China right now with all the stuff they're going through with COVID and the lockdowns. Their exports are off, and that's really going to impact our world here in the West. Investors are watching the Federal Reserve for hints of more interest rate hikes to cool inflation. Next week, we'll have FOMC minutes. I believe that's coming out on Tuesday, Wednesday, or Thursday. Don't quote me, but it's next week. That's running at a 4-decade high, but there is questions of whether or not it has peaked out. Federal Reserve, Mr. I'm going to predict the future. Oh, wait till I won't. Mr. Jerome Powell said this week that central banks might take more aggressive action if price pressure fails to ease. They're going all in. Traders are uneasy about Chinese economy following official data that showed factory and consumer activity in April was weaker than forecast after Shanghai and other industrial centers shut down to fight COVID outbreaks, which is what I just mentioned a minute ago. I think that's going to bite us in the butt. And tech stocks have been coming out with some lower numbers, and they've been slumping. Cisco slumped 13%. 13% after a seller of routers and switch cut its profit forecast. Synopsys jumped 10% after the software company raised its forecast. Retailers and other companies rely on direct consumer spending mostly rose, which is positive, and Amazon and Expedia climbed. Look at this, Expedia climbed 5%. The volatility is just nuts. Put the call ratio just changed right now. As you guys can see here, we are near a turning point. It may not be a big turning point, but we are near a turning point. We can't sustain these levels. Notice after we went over here last time, we went all the way down. I think we're going to have a nice juicy rally, that we're setting up for a really nice rally on Wall Street. And the fact that the bond market is not cooperating to the downside anymore is very positive. The fact that put the call ratio is overbought is very positive, because remember, this is a mean reverting indicator. This means that stocks are set to go higher. The more higher put the call ratio goes, the more put buyers, and the more put buyers we switch over. And here's another major clue. I want to show you guys this. This is interesting and important. Notice the stock market made a new low, right? The Dow made a new low. Notice the SPY made a new low. Not a big low, but it made a new low. Oh, actually, no, the SPY didn't make a new low. The QQQ made a new low, excuse me. There we go. right there. But look at the bond market. Look at the volatility, not the bond market. Again, volatility, not the bond market. Look at that. It couldn't make the high, even though we went to the same levels. The volatility levels could not reach that 34 level, which we reached previously, which tells me that we're going to be going down quite a bit in terms of volatility, and stocks are set to go up. Another major factor, and I've showed this to all of you guys, is the divergence. This divergence is very meaningful, and it's telling us we're very close to bottoming out, especially when you take into account the fact that 10% of the NASDAQ 100 is above the moving average. Let me just show you this here. I mean, this is craziness right here. And from perspective, this is below 20. This is 20%. Look at where we're at right now. Folks, we're literally 2008, 2010, COVID territory. We're there. And if you want to look at the 200-day line, I mean, look at this thing. We are in the dumpsters. No matter what happens, the market's going to bounce right now really hard. And usually when it goes down to these levels, that is a washout. So from where I'm seeing, we may not be at the absolute low, but I think the market is going to start heading higher. Now, looking at each individual sector, as I told you, communication services, look at that. Look at tech, almost broke down to the low, right? Look at communication services, broke down all the way, now the weakest sector. But look at communications, higher highs. Also, let me show you another major indication that the market's going to go higher. Look at the Russell 2000. This is the sector that's been lagging behind everything, like really lagging behind. It closed up yesterday, 0.29. Look at the Dow Jones yesterday, down 0.75. So the small caps are getting stronger, all right? Momentum levels on the NASDAQ stocks are bottoming out. The bond market is going higher, and volatility levels can't sustain those current levels. That's telling me that the market's going higher. Now, in terms of individual sectors, I think energy is going to go up for another nice little run up today, maybe on Monday. Utilities looks like they're in a bounce zone right now. Basic materials look strong. Healthcare looks really strong. Financials looks like they're pretty much done going down. Real estate looks like it's done going down. Industrial looks like it's bottoming out. Consumer staples looks like it's going to have a juicy bounce, a real juicy bounce. Consumer discretionary looks like it's had it. Communication services, as I said, looks like it's going to go higher, and technology looks oversold. In a nutshell, this market looks really oversold. Another major factor, and this is something you got to pay attention to, look at how many times the RSI went below 30. This is the third time in like 15 years on the NASDAQ. So when I say we're oversold right now, we're really oversold, and we're set to go higher. Earnings are pretty much behind us. The biggest factor for next week and the biggest catalyst is going to be, keep your eye on volatility levels. I want to see volatility levels can come up to these levels. If volatility levels can't come to these levels, and if momentum levels start turning, and again, it's very hard to predict the lows when we're right at these levels, but when they start turning and bouncing, that's going to be a very positive sign for the market. Overall, I think we're going to have sector rotation with the small caps and communication, which are the two weakest sectors, starting to lead again. The market's opening up pretty good. Hopefully, we'll see in the next 2 hours if it doesn't lose this, but we can expect a nice little bounce from the last couple of days, at least in the morning sessions. So next week, expect more volatility and expect bottoming action and a framework to go higher from this low. Now, before I let you go, and by the way, I think we closed 4 winning trades this week. I don't have them here, but I believe we closed out a good amount of winning trades. They just didn't have enough time to put them here for you, so I don't have a time to review them. But, folks, I got something juicy for you. New Money Crew head trader Lance Ippolito and his team have been testing a brand new trading indicator for the better part of this year. They've coded the name, initially, Project X. But before they roll it out as a full-blown trading strategy, they need to make sure the system is rock solid as they believe it to be. So far, the system has signaled winning positions in Tesla, AMD, Coinbase, Upstart, PayPal. Wow. Now, Lance wants to take his testing to a new level, and he needs your help. Lance needs you. He's looking for about 100 traders interested in beta testing this new indicator over the next couple of months. Of course, Lance doesn't expect traders to jump in sight unseen, so he put together a small demonstration to show you how it works. I'm sure you want to see it. Click the link below to see Lance's system in action. Monday, weekly outlook, biggest threats, biggest opportunities, and remember, Fed's going to be doing a lot of talking next week. So we're going to be focused on the bond market. Bond market volatility, relative strength of small caps and communication services should give us a really good clue if this, in fact, is a bottoming pattern. If you need to link to this video, go to the YouTube Wealth Press channel and post some comments for me. Good, bad, ugly. Post some comments. Have I been calming you down? Send me some love letters. I love the love letters. I got that from T-Buzz. Support@marketgeeks.com. Bye. Have a great weekend, and I'll see you on Monday. Maybe even earlier. Bye.